Good morning, everybody, and this is your Dow Jones setups for today. So we are top of range as far as I'm concerned. There is a flag here as well. You just draw a line along the bottom here, but the top is not that clearly defined. Your weekly is a massive pin bar at the moment. Your daily has a massive engulfing bar, but gap up and a very, very bullish bar with oscillator scripts to downside like this and crossing over. So this to me is a clear level. It's 39,500. We need to get through that. Once we're through that, I think you should be looking for opportunities to the upside. The 8-hour moving averages are still in a bearish setup, so that is something to keep in the back of your mind, as are the 3-hour as well as the 3-hour oscillators. So all this is telling me at the moment that there's possibly a rejection brewing here for another move back down to the bottom of the range, which makes sense because the bears are going to want to get a weekly red bar. They're not going to want a weekly pin bar because that's just going to add fuel to the bulls. So at the moment, I think you're probably better off trading the S&P 500 and the DAX, to be honest, but we are bullish. We're on the 150 EMA. In fact, all the indexes, all three of the indexes I trade are all on the 150 EMA. So it's going to be the same strategy as the other two, pretty much. Just get down to a lower time frame. And get your smaller range in play. And you can see big move up, range, acceleration up, range. So I would expect the same thing to happen. You're looking for a break of 39,550. Break, retest of 39,550, and that should get you moving to the upside. It is going to be a fairly big move because that is the size of the bigger range, and it's also the size of the move up. That's the one level, but then obviously the other measured move is going to be from this range to there, and that's going to be more of a smaller move like that. But let's get to see what's left. Sense of what is to the left. So that's the closest that you've got. That's for 40,100. And then obviously I think this gap looks open still. Yeah, that gap is still open. So I think you're probably going to find mucking around here. Then you should accelerate. I just want to get there's a couple of levels here, and I want to just check this level that we have at the down. That is definitely clear structure there, and that is also some structure, right? So each one of these levels is fairly clear. So this would be your first target, 39,734. Let's just get down to the lower time frames because this is something that you're going to be doing on the lower levels. Let's just delete that, and I'm going to delete that one. Right, so logic is quite simple. We've had a strong move up. We are consolidating at the moment, so we need a break of 39,554. Break retest of that. Your first target is going to be 39,734. You should see price move back, build a base either all the way down to here or somewhere along the up move to the next level. There will be some structure that will form, come back, test that structure, then turn around and then aim for 39,841. Then should pull back, find support either here or its lower structure before breaking through. And then your ultimate target is going to be 4,100. That's the way that I see this today. And if you do have lots of time on your hands, it'll be a fairly decent 5-minute trading setup, to be honest. The same rules apply. So long as we're above the moving averages, we are long. You're looking for the oscillators to fall back the bottom and turn, and then you're looking for either a pin bar on support, or you're looking for a break of resistance and a retest of it before jumping in on a move to the upside. I definitely don't favor a move to the downside, but I'm also a little bit cautious because we need the week to close, because that will tell us whether the bulls are in charge, or if we do sort of pull back to the bottom of the bigger range down here at 38,595, then then the bears would start coming into control again. But anyway, I think the market's anticipating that the Feds are going to do something, or maybe they're not. Maybe it's just all a flash in the pan just to get cheaper prices so that the institutions could get in lower. That's also a possibility. Anyway, I think once this range breaks and once we find support and structure, then it's going to be more clear cut for the moves to the upside. So at the moment, it's probably 60-40 in favor of us getting a fairly decent trade and us being retail traders. So that's kind of my view for today. Hope it helps, and we'll catch up with you on Monday morning. Cheers for now.